I'm Jack Davis, a crops business management field specialist out of the Mitchell office. I live in Woonsocket, and so we will get started. Going to look today at the prospective plantings and also then the last WASDE report, the World Ag Supply and Demand estimates. So we will go ahead and take a look at that and what changed from March. There's my contact information. You can sure email me is probably the best way to get a hold of me, but you can also call and leave a message on that phone. So I'm just going to run through highlights of the April to March changes. So I have those listed here. So we raised our corn export forecast by 75 million bushel, which is in a response to the strong exports that had taken place. And that's for a total of 2.675 billion bushels for the year. And they raised the projected feed usage by 50 million. Of course, again, in response to the stocks to use that came out for March 1st. And so that's up to 5.7 billion bushels. Our feed use on corn was more than what maybe was kind of expected. Normally, that is about 67% is used up at that time, and this year it was closer to 77%. So that was quite a good jump in feed usage. Ethanol is expected to also increase, a rise in fuel prices and also more fuel being used as we get back to moving around the nation. So that was raised by 25 million bushel to a total of 4.975 billion. So with those in combination, then lowered our projected carryout by 150 million bushel to 1.35 billion bushel. That gets us into a tighter, or what I would call low stocks to use area. So if we have problems growing in the U.S., prices will respond quickly, more so than they have in the past few years. So quite a fundamental change over the last few months. So 9.2 is our current stocks to use, and again, that's lowest since 2013. On the soybeans, they ended up staying the same in their stocks to use. We did end up raising the price by a dime. So kind of the changes that took place there from the March estimate, reduced the export forecast by 30 million and reduced seed and residual use by 19. So stayed the same, a low, very low stocks to use ratio. So again, if there's problems, if demand isn't rationed, if it keep being used and end users keep buying or looking for it, we could see still some response to prices. So very, very tight to finish out this year in our soybean stocks to use. On the world side, not just a small amount of change for our corn. They increased both the world production and the usage. No change from Brazil. Argentina was decreased 1% or 19 million bushel. China's total corn imports from all sources was held steady at 945 million. So we got to kind of see if they're going to take all the sales that they have said they're purchasing. So that was held the same. So world corn ending stocks down about 1.3% versus March. Well, not a lot, but compared to last year, down 6%. So some more things that added positive influence to corn price. And soybeans, they increased a little bit. World production was by 50.3 million bushel. No change in Argentina, and Brazil's production was increased by 73.5. China's soybean imports from all sources again is 3.67 billion. That was held steady, and increased ending stocks by 115 million bushels from March. So not a big change worldwide, but just didn't add any spark to the soybean market at that time. So in at the end of March, they came with the U.S. Corn to stocks, and we saw some pretty good rises. I think limit rises in corn prices that day or the day following, and a lot of it was in the expectations, that the industry and the trade had expected more bushels available. And the NAS estimates was 61 million bushel less than the average trade estimate. And also then lowered the December 1st stocks by almost 28 million bushel. So most of that, a lot of that being to feed use. So more was used up in feed. The soybean stocks were 21 million bushel above the average trade estimate, but it was well within the expectations. So not as big a response to the stocks report for our soybeans. So then we get, on that same day was the acreage intentions report or planting intentions report was released. So that's really our starting point for our new crop of 21-22 estimates. And our first, when that will first be included in the WASDE report, will be on the May report. It was not in our April report. So there is the time frame when those surveys are taking place. And then that will coincide then with the June acreage report or the actual plantings. So just kind of showing the timeline that takes place there of when those surveys are done, and then as the planting progress goes forward. And this came in well below the trade expectations. The USDA has this planting expectations or of planting intentions of 91.1 million acres, and the trade was guessing more. They were guessing about 93.2 million. So that added a spark to the prices that we saw taking place right after this report, and leads to positive outlook, for corn going forward. Our average trade estimate was 90 million acres for soybeans, and the USDA had that estimated at 87.6. Corn and soybeans total is 178.7 million acres. That's 4.5 million acres less than market had anticipated. And now weather will dictate what happens as we move forward to the actual or June report, and we'll see. Excuse me. I'm just going to do a few comments. Recently, our North Dakota and South Dakota have had large amount of prevent plant acres. South Dakota in 2019 had almost 4 million acres, and in 2020, North Dakota was at 3 million acres, and we were in South Dakota still at 1.7 million acres. So in South Dakota, we got some room if it stays dry, to increase some acres over what we have had the past few years. Now, North Dakota is very dry, so they will probably have limited potential to impact. I mean, they may get planted, but the crop conditions or growing conditions are not good right now in North Dakota. So just a history of corn and soybean planting. We were pretty even. I think we like to plant more corn if we can, and if conditions don't allow, a lot of it gets switched to soybeans. So just taking a look at that over history, we were pretty even this year at about 5.6 million acres of corn. I think we're right at 5.7 of soybeans as our prospective planting intentions. This is on a national basis, looking at the June acreage minus the March prospective planting intentions. So on a national average, we could plant 1 million more acres of corn, just compared there, and almost 450,000 on soybeans. So if conditions allow, there is room for that to change between our prospective planting and our June acreage. I think even if we add those acres in and they would happen to get planted, we're still fairly tight on our ending stocks, both for this current crop that we're using up and the one that we're going to plant. So still good demand, still a lot of use out there. And even if we do pick up some extra acres, we should still be positive, more so than we have been the past few years. So just did the same thing for South Dakota, June acreage minus the March prospective planting intentions. And we came into 18 and 19 and even 20, and it just really throws that off. So I just ran from 2014 to 18 as an average, and on average through those years, we decreased corn 70,000 acres in South Dakota, and we increased soybeans by 40,000 from our March prospective planning to our June intentions. So looking at national crop progress, we're right at, I think 4%, is it? Yeah, 4% planted for corn, and our average at this time is 3%. So got started pretty good. Spring wheat's at 30% planted, and average is 14 over the last 5 years, 5-year average. So got off to a good start. I think this week and next week probably slowed things down quite a bit. And we'll see as we come to Monday's report. But this will be something to keep track of, is the Monday afternoon report of crop progress and planting. And then, of course, as it starts to emerge, the condition of the crop. So it'll be important for the market this year to watch that. They'll be using that to determine or guess or estimate whether we're going to have more acres come in to production. So probably a good report to track throughout this growing season. Just wanted to show these maps of Ag and Drought. This comes out each month. They map the drought area and then the major crop areas for each crop. So corn at this time, this week, had about 17% of its production was experiencing drought. And a lot of that is in North Dakota and western South Dakota. So not great big yields that would be affected at this time. but I think just our acreage and the amount of use has got positive on price. And also then, if we don't get yields, this area here would be highly productive. So if the drought continues, so then it's always positive for price. Looking at soybeans pretty much the same. Ends up being about 15% of production that's in the drought, and again showing mostly North Dakota and South Dakota. And then this would be our more highly productive area. Spring wheat, a large amount in drought area, 75%. And not so much on the winter wheat. I think winter wheat's maybe taking a bounce today because it's real cold, somewhat cold in the south, and in Kansas and Oklahoma, and they may be anticipating some damage there. The most recent that I heard, that probably won't be enough to cause any problems. North Dakota, very dry. And of course, South Dakota and that western part also very dry. And I just throwing in hay because hay is an important crop for South Dakota and for our livestock producers. Approximately 34% hay acreage is experiencing drought this year, or at this time. I think we can be optimistic, but we probably need to use caution as we go forward through this year. Don't let these good prices escape without getting some of it sold, turning some of it into cash. Just wanted to show a longer term price chart. The black line being our average monthly price received in South Dakota for corn. And then the green line is that 20-year average, or whatever that would be. It's not from 2008 to 21, and that is 409. And then I just broke it down into a couple different time periods. 2008 through 10, the average was 388. During our boom times, 2011 through 14, the average was 544. And then as we came off of that and produced more, 2015, the average was 328 for cash corn received in South Dakota. Currently, there's some May bids, the central part of the state at 589. So just, there are some opportunities to be above that average that we had from 11 to 14. And it's probably a good idea to take advantage of some of that. As you guys have been on these, I use FinBin to do some financial analysis on farms and cost of production analysis. And for this example, they're just starting to come out now with the 2020 information as people do their closeouts and get finished up with that. And I pick on the 1,000 to 2,000 acre farms in those 4 states. And I've broke it into 2 categories. So I got the top 40% and then the next 20%. So 40 to 60% level of net income, and then the top. And the difference between those on cash rented corn ground was $116 difference in net income. $30 was due to the price that they received. I took their average 3-year average production and used, actually what I did was an Olympic average for the last 5 years of those in those to use as a standard. So that's how I isolated yield. And then I used 370, which is our USDA program price, as a price, and isolated that. So that that's where I came with that. And then 86 was due to production. Actually, the lower net income had a $3 difference in yield, and then so it really came down to being able to produce at a lower cost per acre, and that was $89 for that top 40%. One more thing that I just wanted to share was a change in earned net worth. And as you can see on the green line is at 9%, and the yellow is 7%, and the red is 4%. So I started them out with the same equity, and I think I just wanted to highlight this as we get out here to about 8 years, then it just accelerates. If a farm or business is able to continue that high level of profit or change in earned net worth, how much faster it can grow than a lower one. Now, just as an example, I think most of you probably know the rule of 72. So if we take what we're depositing or what we're earning, divided into 72, that will be that we can double in that many years. So at 9% in 8 years, we would be able to double where we're at. And I think that this chart just helps to highlight that, showing the importance of when we have that profit, that we can keep it and add it to our net worth. Just wanted to show, I just picked a long-term, okay, what we do, go back 10 years here. And so this is a month taken from bar chart, monthly average price. And I just drew a few lines in there, kind of at the top here. I just arbitrarily picked them, and that's right at 509. This would be in the middle of our heyday time frame, and that's at 680. And of course, if we're really optimistic, we're up at 720. So just wanted to show that. Don't let the $5 corn escape us, if we think back to what we showed for averages during that time frame. Same thing on soybeans. And I just arbitrarily picked them right at $12 for soybeans. It says May, but it's actually the nearby contract on a monthly basis. I think we have some opportunities for profit. I think we need to know our costs and lock in when it's favorable. Take advantage of those. If we don't have someone that's strong at doing that in our operation, then it's not a bad thing to hire out. Like our unknowns, our growing season weather and what is our return to normal look like as activities increase, change in politics, all of that are unknown. That's just my always ending checklist. And do we have any questions for today?
Hey, Jack, I had put one in the chat. When you had your FinBin data up as far as the difference in corn production and net income,
Yep.
Just curious if you had any data on government payments or subsidies or grants, and if there was any distinguishable difference there either between the
I can look at that. I don't know that off the top of my head, and they do report that, and I'll have to go back in and look at that.
Okay, thanks.
Yeah, I don't know that off the top. I do know that, and I'm going to give quite a range here. It was $40 to $60, per acre in South Dakota and North Dakota per base acre. Why don't you email me and then I will send that to you.
Sounds good. Thanks.
Yeah. And let me stop sharing because I am not seeing the chat here. Okay.
I guess one other question, with the planting intentions, there's such a discrepancy between what the market was expecting and what was reported. I know it's tough to figure out exactly where the difference lies in there, but you get the sense at all that producers were maybe underreporting intentions a little bit?
I didn't know, and I don't know how much Eric can comment on that, but I don't know that they were, and they do a large survey, so statistically, I think they can throw out any outliers that are trying to mess with the system. Now, there is room for change, and that it does happen, but it's not. You can't do any prediction on it. The guys out of Illinois do a lot of analysis on that, so I did some rating on that, and it's I have it written down. It's plus or minus 2 million acres are corn and soybeans, okay, from intentions to final, and it's not any prediction whether it's one way or the other. There's no bias that way. If you combine the two, it's about 3 million acres total. And then on principal crops, it's plus or minus 5 million acres. So that's be our total planting of hay, sunflowers, sorghum, all the crops, all principal crops. So there is room to change. And I think if we looked at that one chart, it tends to change about 1 million acres to corn and about 400,000. I don't think we'll get to expectations. And, that's why our crop progress reports are really going to be, for market-wise, are going to be important as we go through this planting season. They'll be looking to see if that is changing, and they'll use that, the market analysts. Well, anything else, guys? How is weather where you're at? I know some of us in South Dakota, at least that northwest, is in really tough shape. I haven't been out there, but we had a call yesterday, and those fires just really, really devastating, I guess. And pastures are blowing, and just a tough deal out there for those guys. I'd say here in the middle, we're looking pretty good. We got probably 1.5 to 2 inches of rain this last week. Guys are ready to go. I think they're just waiting for it to warm up a little bit. And, as I showed on our prevent plant, that a lot of that was in the center part of our state. And boy, if it stays like it is, should be able to plant a lot more. That's another thing for South Dakota anyway. There's much more incentive, after following 2019 and what we came in for crop insurance coverage in 20, there was no real incentive to go out there and plant like guys pushed in 19, thinking that maybe there would be a boost in price or that they had to have it planted. And I think in 20, people sat back in South Dakota and said, nah, not going to do it. So I think this year there's more incentive to do that, both on the price, and the other thing that would come into play would be if guys can get it planted, they don't want to get bumped out of that prevent plant situation. And some of them already are. So that area will get planted to something if it's possible. I don't know that I had that chart. I was going to have a chart. We are down in our hay planting intentions at right at 3 million acres. And they use harvested acres for hay. So, and that's down to 3 million. Our high in South Dakota has been 3.8 million. And we kind of tend to run right at that 32.50 to 35. So we are down on hay, which doesn't is not good for our drought situation in parts of the state. As we talked yesterday, there won't, it's easy to move hay, and if some of that's or easier than moving silage. So if some of those extra acres get planted to corn or sorghum, whatever crop for silage, it's not near as easy to move around as our hay, and we are down on our hay intentions. Now, with that being said, the balance to that would be we had a great year for the most part of wintering, so not a lot of hay used up, not extra stuff used up. Guys were able to run cattle on stocks and got by very mildly through this winter. So that's what I have for thoughts today. Like I said, Heather became very sick just as we were getting started. So I said, hey, I can probably do this. And I think we made it through okay. So that's what I'll have for this week. If there aren't any more questions, I'll say thank you for joining us today. And if you got other questions, just shoot me an email and I'll respond to that. To the one on the subsidies, what the difference was between those two.